Hello everyone. A very good afternoon to all of you. How are you all guys? I hope everything is fine. So in the last class we discussed about the strategy part for the SEBI general examination, and in this class we are going to discuss about the basics of accounting. So this will be the first class related to accounting. Okay? Just give me a second. Okay guys, let's start the discussion. So we'll be learning about basics of accounting in this lecture. First of all, let's quickly just revise whatever the things are there in our syllabus. So in commerce and accountancy subject, we are having so many things related to accounting. In today's class, we are going to target the basics of accounting. Okay, so we'll learn about a lot of things related to accounting from the very scratch. Okay, hello everyone. Hello. Acha, how many of you are from non-commerce background? Tell me in the comment section by typing yes. How many of you are from a non-commerce background? So the starting 2 to 3 classes will be quite, very essential for you guys if you are from a non-commerce background, and even if you are from a commerce background and kind of, you feel like you have lost that touch for accounting, or maybe you have taken a gap and maybe you have completed your graduation long before. So no, not at all a problem if you attend these classes, the basics of accounting classes, 2 3 classes, you will get to know about everything. Okay. Okay, so hmm. So Ved and Deb, I can see that you both are from a non-commerce background. That's fine. Okay, not to worry about that. So we'll be learning about basics of accounting today. Can you guys tell me who he is? Have you guys ever seen him? Maybe in some of my YouTube videos, or maybe in news channels, or in case if you are in the RBI batch, then definitely in the basics of accounting must have taught about I must have talked about him. Any idea? Anyone? Who he is? Nobody knows. So he is the great legendary investor, Mr. Warren Buffett. Okay. He is the great legendary investor, Mr. Warren Buffett. The name of the company, the name of the company which he owns is Berkshire Hathaway. Okay, it's a US based company, it's in America. So the price of Berkshire Hathaway one share as on 7th of December, so it's a bit of old data. I think it's been more than a month. So you look at just have a look at the price. $698,500. Okay, $698,500. So you can convert it right after this class. You can convert it by multiplying it with 85 or 86. I think whatever the rate may be today. Right, rupee is depreciating day by day. So please calculate it and then try to think that the value of this share is kind of in crores, right? And why I'm telling you is because this legendary investor has told so many things about accounting in the public domain, right? So one of a very famous quote of Mr. Warren Buffett is, accounting is the language of the business. Accounting is the language of the business. Can you guys imagine? Sorry, just checking the comment section. Is the company so stable, Hathaway? Yes, the company is so strong. Okay, it's a conglomerate of multiple businesses. And it's not that if the share price is quite high, that means the company is strong. Okay, we'll talk about it in our later classes. It's not at all like that. If the company share price is quite high, then the company is strong. Just like an example of MRF, Madras Rubber Factory, right? The share I think is around more than 1 lakh in India. The price of one share is more than 1 lakh, but that doesn't mean it's kind of superior than Reliance Industries. Reliance Industries share price might be around 2200 or 2500, but MRF share price is more than 1 lakh. That doesn't make MRF a bigger company. Okay, we'll talk about this concept as well in the coming classes, right? So Warren Buffett has once said that accounting is the language of the business. If you want to communicate in business language, you must know accounting, right? Just imagine a situation that you are in any kind of foreign country like Germany, France, and you don't know the local language, China, and you don't know the language, you don't know how to communicate, right? It's so difficult then. That's what happens when you do business and you don't know accounting. Okay, it's the language of the business. Why it is the language of the business? If you have seen news channels, right, they communicate the data in language, in accounting language, right? Just like I can see here is FMCG EBIT is up by 12%. Then what is EBIT? Earning before interest and tax. Not at all a problem if you guys are not able to understand what EBIT is all about. मैंने अभी तक पढ़ाया भी नहीं है, right? I haven't started teaching it. I'm just telling you that these terminologies will be learning in the coming classes, right? They are so important because if you don't know accounting, you won't be able to understand how the business works. Okay, you won't be able to communicate with the investors, you won't be able to communicate to the shareholders, stakeholders. Okay, if we see this image, we can see that the net profit of Reliance Industry is 19,000 crore. Now what is net profit, what is revenue, what is EBITDA margin? These all terminologies are so important for the examination and for your learning purpose as well, right? If you want to grow your financial IQ in life, if you want to be smarter in terms of finance, then accounting is the base for it. Okay, if you know accounting, you get to know how the business works, how to analyze business, and so many things. Okay, so let's start with accounting. So accounting is basically based on 4 pillars. I'll start from the very scratch because you are from a non-commerce background as well. Definitely, okay. Even if you guys are not from a non-commerce background, then too I start from scratch only. Assuming that nobody has ever learned about accounting ever. Okay, nobody has heard about accounting. So not to worry about anything. Not to worry about that I am from a non-commerce background. How will be I competing? That's not at all a big issue. I've seen multiple candidates from a non-commerce background clearing this examination, right? And I have seen multiple candidates having a strong commerce background, but they didn't clear the examination. So that's not at all the criteria whether you are from a whatever background you are having. That's not the criteria. Background is never the criteria. What you do today and tomorrow, the kind of hard work, right? That's the only criteria. Sir, should we need to write down notes from class? I will advise yes. I'll tell you why. Because when you write something with your own hand, right, you are using somewhere or the other, you are using your brain function to write. Okay. So somewhere or the other, that kind of concept is getting into your head. That becomes a permanent memory, long lasting memory. When you read a notes provided by any of your friend or any of the institute, you're just reading it. When you're writing it, a separate brain function is working. Reading is important, writing is game changer. Okay, reading is important, writing is important, revision is also important. So 3 of the things are important. So I will advise that the major things that you find that I'll use certain keywords. I'm about to use keywords in these 4 terminologies. Okay, so make it a habit that buy a new copy for accounting and other subjects related to whatever subjects I am teaching here. Make a separate copy and try to jot down the keywords at least that I am saying. You don't need to jot down each and everything, but at least the keywords. That's my humble request. That will make you cover a lot of things in a short period of time. Okay, I'll tell you how to make short notes as well. That's very, very important for the examination, because it's not at all practically possible to revise all the things just before the examination, right? There are so many notes, there are so many classes. I will tell you how to make short notes as well. Okay, let's start today's discussion. Four pillars of accounting: asset, liability, revenue, and expense. Asset, liability, revenue, and expense. What is an asset? Any idea? Can you guys tell me what is an asset? And one more request from my end, please be participative. I cannot talk to you verbally, but you can write it down in the comment section always. And I don't care whether you are giving a right answer or a wrong answer. That's not at all my motive. Okay, I don't care about that, because that's not the criteria. If you are giving a wrong answer here, that's still fine for me, because you at least try to attempt it, right? You tried attempting a thing. That's kind of an important thing for me, right? And those who are giving a wrong answer here, there are high chances that they are giving a right answer in the examination. That's for sure. Okay, so everyone, जो भी क्लास देख रहे हो, please tell me what is an asset. What do you mean by an asset? Just type it down in 1 or 2 3 words. Okay, okay, they were saying liability plus owner equity. Okay, okay, that's a good answer. That's the formula, I think, right? That's the accounting equation. But what about the little meaning of assets? What are actually an asset? What is an asset? Okay, assets, wealth I have in general. Okay. Mhm. So, in simple terms, I would like to say this is not a professional answer. I will tell the keywords. In simple terms, I can say that an asset is something that puts money in my pocket. An asset is something that puts money in my pocket. Let's suppose a building. I have a building. So, I can give this building on rent and I can earn 10,000 rupees per month. So, somewhere or the other, this asset is putting money in my pocket. It gives me the ability to generate money, right? And what is a liability? A liability is something that takes money out of my pocket, like loan. Say, for example, I have taken a bank loan, okay, worth rupees 1 crore at 10%. So 1 crore into 10%, that means 10 lakh rupees every year will be going out of my pocket. 10 lakh rupee every year will be going out of my pocket. So an asset is something that puts money in my pocket. A liability is something that takes money out of my pocket. A very famous quote from a personal finance book, Rich Dad Poor Dad. That's the name of the book, Rich Dad Poor Dad, by Robert Kiyosaki. Okay, so Mr. Robert Kiyosaki is the author of that book, Rich Dad Poor Dad. After your examination, you can read that book. You will enjoy it if you like finance. Okay, and I'll try to make you guys like finance, because I love finance. Okay, there are so many things in it which are so useful for the examination, but in practical life as well. It's not how much money you make, it's how you manage your existing money. Okay, so a person who is earning 1 lakh rupees per month, okay, that's person A. There is a person B who is earning 50,000 rupees per month, who will be having a large amount of wealth after 20 years. What do you think, guys? Who will be having a large amount of corpus, a immense wealth after 20 years? There is no such answer for this. Okay, you guys might be thinking that Mr. A will be having a large amount of corpus. That's not true. It can be, it might not be also. Okay, so it totally depends on your habits, your financial habits, that how far you go, how far you make your capital grow, right? So there is no such answer, straight answer. So the quantity of money doesn't determine your wealth creation power. So I got an answer in the comment section. Who manages his income better way? That's correct. That's correct. Okay. So if I talk about the literal meaning, like what is an asset, what is an liability, if I talk about the keyword, then asset are my, what are my asset? They are my resources, valuable resources. You can write this word. Assets are my valuable resources that help me generate future economic benefit. Okay, that help me generate future economic benefit. If I talk about liabilities, what are my liabilities? Liability is an obligation for me. Liability is nothing but an obligation for me, right? I need to pay liability. That's a kind of obligation for me, right? That's an obligation for me. Just give me a second. I'm resharing my screen. Just give me a second. Just give me a second. Okay, great. I'm resharing my screen. Perfect. So we were on asset and liability. So asset are nothing but valuable resource that I'm having in my business, and liabilities are my obligation. Okay. What about revenue? Revenue is nothing but sales. I sold goods worth rupees 1 lakh. Okay. I am a dealer of this pen. I sell this pen. So I sold this pen worth rupees 1 lakh rupees. Okay. I sold my pens worth 1 lakh. So that's my sales. I can call it revenue also, right? I can call it income as well. So there are a lot of expense also. For running businesses, there are a lot of expenses also. Can you guys give me some examples of expenses that we need to incur in order to do the business? Can you give me some example of expenses that we need to incur in order to run the business? That's so simple. Give me some of the example of expenses, guys. Quickly in the comment section. Rent, salary, raw material. Very good. That's correct. Rent, salary, raw material, and taxes, right? Perfect. So there are a lot of expenses you already know, right? So after earning 1 lakh rupee as sales, I incurred 80,000 rupee as expenses. That means 20,000 is nothing but my profit. Okay. 20,000 is nothing but my profit, right? So revenue is not equal to profit. The first thing which I want to tell you guys, revenue is not equal to profit. Your sales is not your profit. Your sales minus expenses are your profit, right? So if I talk about these two terminologies, they are balance sheet items. What is a balance sheet? A sheet in which balances are there. A sheet in which balances are there. Let's not complicate anything. Business में जो भी balance बच गया, whatever the balance is remaining in business, it will be transferred to the balance sheet. खत्म. Right? That's balance sheet. Balance is की sheet. If I talk about revenue and expenses, they both are P&L items. Right? They both are P&L items, profit and loss account items. So they determine whether I will be having profit or I need to incur losses. Let's suppose my revenue is 1 lakh rupees and I have expenses of 80,000. That means 20,000 is my profit. Now let's suppose my revenue is 1 lakh rupee, but my expenses are 1 lakh 20,000. In that case, I'll be suffering a loss of 20,000. Right? So that will be totally determined by P&L. When we will be preparing the P&L account, we'll be having an analysis of revenue, we'll be dealing with a lot of expenditure, and then we will be calculating whether we are doing a profit, whether we are having a profit or we are incurring a loss this financial year. Right? So every financial year, I will be preparing balance sheet, I will be preparing P&L. What is a financial year? As per your understanding, what is a financial year? Tell me in the comment section. What do you mean by a financial year? Any idea? What do you mean by a financial year? April to March, right? That's April to March is our financial year, right? Let's suppose 1st April 2024 to 31st March 2025. Now this is a financial year, right? I'll be preparing my balance sheet and profit and loss account when 31st March 2025 arrives, right? I'll be preparing a balance sheet for the year as at 31st March 2025 as at, okay, I use the word as at, matlab as on date. That means as on date. Your balance sheet is as on date 31st March 2025. Because balance sheet is nothing but balance is ki sheet, right? Whatever balances I am having in my books of accounts in my business, that's balance is ki sheet. That's why balance sheet is created as on date, because 30th March balances are different, 31st March balances are totally different. So balance sheet will be prepared at a point of time. Do remember this terminology. Right? At a point of time, and P&L we'll be discussing when we are studying the P&L in the coming few slides. Okay. Acha, guys, I am giving you some examples now. You need to tell me whether it is a debtor or it is a, sorry, whether it is an asset or it is a liability. In case of complicated terminologies, I'll try to help you out. So the first terminology is debtor. This is an asset for me or a liability for me. I'll tell you what debtors are. I sold good rupees 1000 okay, to Ved. I sold goods worth rupees 1000 to Ved on credit. Okay, I'll be receiving money from Ved in the near future. He'll be paying me after 1 year. So who is Ved for me? Ved is my debtor. Right? Ved is my debtor. I have sold him goods on credit. I am yet to receive the money. So whether Ved will be an asset for me or a liability for me? Ved is my debtor now. I'll be receiving money in the near future from Ved. Except Ved, everybody is answering. Okay, I got the comment. Please do tell us about your working at foreign bank. If time remains, it will be interesting. Sure, definitely Ved. First, answer my question. I'll definitely do it in some of my free time. But today is a high time to learn accounting, right? And there is a long way to go for SEBI. We'll be interacting on a daily basis I'll be having so many classes. I'll definitely share with you my experience in uh, foreign bank in Royal Bank of Scotland. Okay, that's perfect. Ved will be an asset for me. Why? Because Ved is my debtor. He will be paying me money in the future because I have sold him goods on credit. I'll be receiving 1000 rupees in the near future. That means he's causing me a future economic benefit. He's providing me a future economic benefit, right? That's my debtor. Perfect. Next is land. Land is an asset for me or a liability for me. That's quite simple. Very straight answer should be there. Just try to write A or L in the comment section. Just quickly write A or L. Whether it's an asset, A for asset, L for liability. Yes, asset. Land is an asset, a plot of land, right? Very good. What about building? Obviously, it's again an asset. What about bank overdraft? Is it an asset or a liability for me? It's an asset or a liability for me. Everyone in the comment section, quickly. Yes, liability. Bank overdraft is a liability for me. Bank loan again is a liability for me. Capital. What about capital? Capital, is it an asset or a liability for the business? So let's suppose I have invested 1 crore rupee in my business. ध्यान से सुनना. I have invested 1 crore rupee in my business. Will it be a liability or an asset for my business? Will it be a liability or an asset for my business? Do tell me in the comment section. Actually, there are so many A's and L's that I don't know whether you have written it for capital or for bank overdraft or bank loan. Okay. Okay. Capital is a liability. Okay. They were saying it's a liability, but I have to invested money in my business. How can it be a liability? Okay. Ved is saying that it's an asset. So one student is saying that it's a liability and another is saying that it's an asset. ये तो बहुत confusion हो गया. So we need an expert opinion. So can Shwet, you can tell us whether it's an liability or it's an asset. So one vote each as of now. I need Shwet answers as well. I have to give income from asset. Okay. Okay. Shwet is saying that it's an asset. Right? Shwet is saying that it's an asset. So 2 votes for asset, 1 for liability. What should be the correct answer, guys? What should be the correct answer? I won't be telling you the correct answer in today's class. Okay, I'll tell the correct answer in tomorrow's class, accounting concepts and conventions. Why? I want to back it with a strong reason. So I'll be explaining a very important concept in tomorrow's class. So definitely do attend, and I'll tell you why it is a asset or a liability. Okay, whether it's an asset or a liability, I'll tell you tomorrow. Right? Next is trade creditor. So trade creditor is just the opposite of debtor, right? Trade creditors are those suppliers from which I have bought goods on credit. So in order to supply this pen, I buy plastic. First, I will make this pen, right? So I bought plastic. I bought plastic from Shwet on credit. I told Shwet that please allow me a credit of 3 months. Shwet ने बोला सर ले जाओ कोई दिक्कत नहीं है. So I have taken a credit from Shwet, right? Shwet has supplied me the plastic for making this pen worth rupees 1 lakh. Now Shwet is my creditor. He is my creditor. I need to pay him the money. That means Shwet will be a liability for me as of now. Just the opposite of debtor. Okay. Next is cash at bank. Obviously, it's an asset. It's your cash which is being deposited in bank, right? If I talk about assets, then we can see that plot of land is an asset, buildings are an asset, right? Machineries like this JCB machine, it will help me in my business. It will help me in generating future economic benefits. I can even rent it out. It will then again also help me in generating benefit, right? So these kind of vehicles or plants and equipment, you can see a lot of plants and equipments over here, right? You can also see tractors over here. These all are my asset because they help me generate future economic benefits. These all are my valuable resource, right? say for example say for example, if I am the owner of this departmental store, let's suppose I am the owner of this departmental store. Now what all this stuff is for me? This is my stock, right? This is my stock. I need goods. I will be trading this stock to people in return of money. People will pay me money, they will buy goods from my store. That's the business. So this is my stock. This is my stock, right? That's my asset. But these all are the examples of current asset. What is current asset? I expect them, I expect them that I will be realizing cash out of them within 1 year. I expect my stock to be sold within 1 year. Obviously, I'll expect that only, right? कौन सा businessman सोचता है कि पड़े रहने दो stock को सालों तक? No. Every businessman has an expectation that yes, I'll sell all of my stock within 1 year. So that's a current asset. What is a current asset? Those assets that have a duration of less than 1 year, those assets that are converted into cash, right? Or debtors within 1 year. If I talk about cash, then obviously it's a current asset. If I talk about the bank balance that I'm having, it's a current asset for me. Sir, what about plot of land, building, these kind of machineries that you are having? These are my non-current asset. All these assets are my non-current asset. Non-current asset means long term. Or I can say more than 1 year. I'll be keeping these assets in my business for more than 1 year. Why I will sell my plot of land? Why I will sell my building? I'm not a broker, right? I don't have the business of selling buildings each and every day. No, that's my office building, right? That's my home or my plot of land or my machinery that's helping me in doing the business. That's a non-current asset. Those assets which are kept in the business for more than 1 year, right? Those are my non-current assets. Okay, those are my non-current assets. If I talk about current assets, then stock, cash, bank balance, debtors, they are my current asset. Why debtors? Because usually in business we give credit for 30 days, 60 days, 90 days, like that, within 1 year only. Nobody gives a credit of more than 1 year. Have you ever heard that, have you ever heard from a shopkeeper that bhaiya give me the money after 1 year? No. क्या बोलते हैं? कल दे देना, अरे कभी और ले लेंगे. These are kind of lines that the shopkeeper uses, right? When you don't have the money, अरे कोई बात नहीं, कल ले लेंगे. Just give me a second. Huh? So debtors are those assets which are realized within 1 year, right? Next term, liability. Liabilities are my obligation. So we can have a bank loan, right? If I'm having a long-term loan, then these will be my non-current liabilities. Non-current liabilities, right? Those liabilities that I need to settle after 1 year. Let's suppose I taken a loan, house loan from a bank. That's not a current liability. I'm not going to pay off that loan within 1 year. I'll be paying that loan in 1, 2, 3, 30, 20 years, right? Bonds, we'll discuss what bonds are all about later on. Electricity bill, right? So I haven't paid it yet. So this is a bill which is payable. I need to pay this bill. That's a liability for me. Whether I'll be paying it within the year, yes. I need to pay this bill within 1 year. Otherwise, electricity वाले आके connection ही काट देंगे. The department will turn off the power. They will cut my connection. I need to pay this within 1 year. That's a current liability. Okay, that's a current liability. Now, this is a format of balance sheet. And when we will be preparing this balance sheet, 31st March of the respective year. That is the last day of the financial year. Last day of the financial year, I'll be making my balance sheet. We can see so many terminologies here. So in balance sheet, what comes is assets and liability. All the assets and liabilities will come under your balance sheet. You will never see revenue and expenses in your balance sheet. You will never see revenue, that is sales, or any kind of salary expense in your balance sheet. That's not a possibility. Okay. You might see salary payable in your balance sheet, but you won't see salaries in your balance sheet. There's a huge difference. And I'll tell you why. Okay, I'll tell you why. In the coming few classes, I'll tell you why there is a difference. Right? Just give me a second. Just give me a second. Just give me a second. Okay. So till now, enjoying accounting, guys? Yes or no in the comment section? I hope I get some 2-3 yes. Enjoying accounting? Easy है अभी तक या टफ है? टफ तो नहीं लग रही है? Great. Okay, and in case if you are feeling any kind of doubt, like you are having any kind of doubt, then you can always ping me in the comment section. I'll be happy to clear them as well. Okay, but first, in 2-3 classes, do a lot of hard work so that your base becomes stronger. And once your base becomes stronger, you won't be a non-commerce student ever. Okay, and I'll make sure that you won't remain a non-commerce student. So whenever next time somebody asks you whether you are from a non-commerce student, you must be saying that I am from an arts background, I am from an engineering background, but I do have a very strong base in commerce. Okay, let's start. So I told you that in balance sheet we are having assets and liability. We'll never be having any kind of revenue. We'll never be having any kind of expense. Those are P&L items, profit and loss account items. Okay. Then what will be there in the balance sheet? In the balance sheet, in the asset side, I can see plant and machinery. Now that's a non-current asset. Long-term nature wala asset. We have land, non-current asset. Building, non-current asset. Stock, current asset. Debtor, current asset. Cash in hand and cash at bank, current asset. Right? So I can tell that the assets, I can say that assets are divided into two parts: current, non-current and current asset. Non-current assets are those assets that are for more than 1 year. Current assets are those assets that are less than 1 year. So plant and machinery, land and building, these are my non-current assets. I won't be selling this, right? I won't be selling these assets. Have you ever seen that the businessman has sold the building in which he is doing business? No. Yes, if he is bankrupt, then definitely, but not in a regular basis. How can memorize all this? So you need to do a lot of hard work, a lot of revision. That's the only way. That's how I have learned these things. Okay. You need to study it on a regular basis. What to do is to, after the class, just revise it quickly once. And before going to sleep, again revise it quickly once. it will go to your permanent memory. Okay, it will definitely go to your permanent memory. So don't accumulate the things. Like whatever I am teaching you right now, you need to study it right after the class, or maybe after 1 or 2 hours after the class. Take a short break and revise it again. Don't leave it for tomorrow, because tomorrow will never come. Okay, and you need to do cumulative revision. Whatever I have studied you now, you are studying it today, plus whatever I'll teach you tomorrow, you need to study that plus the yesterday's class. That's why I'm telling you to make a short note, because it's not possible to again and again watch these lectures. That's not possible. Okay, let's go ahead. So I was talking about non-current asset. So I can see that there are three assets here that are non-current, and if I talk about stock, debtors, and cash in hand and cash at bank, these are current assets. Because stock, what will happen to the stock? One day, what can happen to the stock? Maybe nothing. बिका ही नहीं. I was not able to sell the stock. Then it will remain as a stock only. That's the first possibility. A second possibility is I sold it for cash. So stock went out of my business and cash came into picture, right? Let's suppose I sold this pen for 1 lakh to Ved. Then this pen will be out of my shop and 1 lakh will be coming in, right? I've sold it for cash. And the third possibility, I sold it for credit, on credit, right? I sold it to Deb on credit. Deb told me that I'll be paying you after 3 months. I said, fine, not at all an issue. Pay me after 3 months. Now Deb is my debtor in this case. So what can happen to a stock? Maybe it remains a stock only, but that we didn't expect, that we never expect. Nobody is planning for stage 1, right? कौन सा बिजनेसमैन ये सोचता है कि मेरा स्टॉक नहीं बिकेगा, राइट? Nobody thinks like that. Everybody is here to do business, right? So the first case is not as of now here. It can be a chance, that the stock didn't, the business is not doing well, so nahi bika stock. That can be a possibility, definitely. But in most of the cases, what will be our mindset? That either we'll be selling it for cash or on credit basis, so debtors will come. Right? In both the cases, we are planning to turn this stock into cash or debtor within 1 year. That's why it's a current asset. That's why it's a current asset. If we talk about debtor, then usually the credit terms are 30 days, 60 days, 90 days, and sometimes 120 days also. That means my debtors will turn to cash quickly, right? I can realize my debtors in cash within 1 year. That's why it's a current asset. Okay. And if I talk about cash in hand or cash at bank, obviously it's already in cash format. That's a current asset only. I can use it immediately, right? That's the asset side. Let's talk about liabilities now. If I talk about liabilities, then again two classifications will be there: non-current liability and current liability, right? If I talk about non-current liability, then equity share capital, preference share capital, general reserve. These all are my non-current liability. We'll be learning about each and every terminology. Okay, we'll be learning about each and every terminology. Don't worry about it. Abhi, we are just understanding the balance sheet. Okay, these are my non-current liability. Nobody withdraws capital every year, right? Like I invested 1 crore rupee in my business. Now it's for long term, obviously more than 1 year, right? I won't be taking it back. That's not possible. I have purchased a building, I have purchased an office, I have purchased plant and machinery. I won't be selling it back, right? I've invested my money in my business. That's my capital, right? Debentures. As of now, you can think debentures are nothing but long term loan. They are nothing but loan. What are bonds? They are nothing but loan as of now. We'll talk in detail what are debentures, what are bonds. Okay. Then long term bank loan. So I can say that all these things like equity share capital, preference share capital, debentures, long term loan are my non current liability. And I can see trade creditors and bank overdraft, these are my current liability, because I need to settle my creditors within 1 year. I need to settle my bank overdraft within 1 year. Okay, so Deb is saying that so capital is a liability. Yes, Deb, capital is a liability, but the reason I'll tell you tomorrow in tomorrow's class. Reason I'll be only telling tomorrow only. Okay, capital is a liability for the business. Okay, for the business, it's a liability. And the reason is so interesting. We'll discuss about it in tomorrow's class. Okay, so that's how a balance sheet looks like. And as somebody has already said in the in the initial time of the class, that assets are equal to liability plus capital. Now that's nothing but accounting equation. That's the accounting equation. It will always hold true. This is the total of my asset, 6,75,000, right? This is my capital. I can see equity share capital, preference share capital, general reserve is a part of equity share capital as of now. You need to remember this. I'll tell you the concept. General reserve is a part of equity share capital. So these three are the part of my capital and these are my outside liabilities. These are my outside liabilities. Okay, so basically asset is equal to the liability and capital. And I can see that the total is matching. So here in the liability side, we are having liability plus capital. In the asset side, we are having asset and the total is matching. I can see that it's 6,75,000. Okay. And this will always hold true. Sir, what if assets are not equal to liability plus capital? Then that means you have made a mistake somewhere. Some kind of mistake you have made. Okay. Some kind of mistake you have committed. Okay, so that won't ever happen, that asset won't be equal to liability plus capital. So do remember this equation. In SEBI general examination they have asked it in the previous year paper, right? I don't think in the last year, but yeah, in 2020 or maybe 2022 they have asked it directly, this equation that we are learning it in very first class only, right? So capital are not actually liability, but just to match. No way. Capital is actually a liability. We are not just doing a matching stuff here, but capital is actually a liability. Okay. So that's a homework from my side for you. That's a gift from my side. Do research why capital is a liability, and we'll be discussing it in tomorrow's class definitely. Okay. Why capital is a liability for business. Do research it today after my class. Okay, don't try to google it right now. Okay, even if you are doing it right now, don't try to do that. We will be learning it tomorrow only. That's a homework. Okay, then let's understand what are preference shares and equity shares, right? We saw two terminologies in the balance sheet: equity share capital and preference share capital. Do you guys have any idea about what is equity share capital, what is preference share capital? Any idea about it? Tell me in the comment section. Any understanding around this? If you don't have any idea, then write no. Maybe some of you might be hearing, most of you guys who are from a non-commerce background are hearing preference shares for the first time maybe. Equity shares which company issue share in market, preference shares also company issue. Okay. So let me tell you the difference. Equity shares, equity shares are the owners of the company. Okay. Equity shares are the owner of the company. Preference shares are not the owners of the company. They are shareholders, but they are not the owners of the company. ठीक है. First difference. Second difference, preference shares are having a right to receive fixed dividend. What is dividend? Dividend is nothing but a part of profit, right? Dividend is nothing but a part of profit. So I earned income. I have did a sale of 1 lakh rupee. I have incurred expenses of 80,000. So I'm left with 20,000 rupee profit. Now I can distribute it to my shareholders. I will be distributing it to my shareholders, right? I made a sales of 1 lakh. Expenses are 80,000 for making this sale. So I have 20,000 profit. So I can distribute to my shareholders, that is equity shareholders and preference shareholders. So preference shareholders will be getting fixed dividend. They will be getting fixed dividend, right? But equity shareholders will be getting variable dividend. Sir, how to compute this variable portion? Array, it is very simple. Preference shareholders are having a preference over equity. They are having a preference over equity shareholders. Equity shareholders have residual interest. Sir, what do you mean by residual interest? First, pay off all the expenses from the profit. Pay all the interest expenses. Pay everything. Pay preference dividend as well from profits. Then, if something is left, that's a residual interest. That's for equity. Okay, that's for equity. That's for equity. Right? In case the company is almost bankrupt, or I can say the company is bankrupt, then preference shareholders are having a preference over equity shareholders, right? If I am the businessman and my company is going bankrupt, I'll be first paying preference shareholders, because equity shareholders are the owner of my company, right? I am only the equity shareholder. I am the owner of my company. Who are the preference shareholder? Anybody can be a preference shareholder. Like, say for example, let's take an example. I have opened a company XYZ EdTech. Okay, so I teach accounting in this company. So there are two shares, preference shareholders and equity shareholders. I'm offering you guys my share, right? I need to raise capital. I need to raise 1 lakh rupees, okay, from you guys. 1 lakh rupee each. So tell me whether you will be buying my preference share or whether you will be buying my equity shares. Tell me in the comment section. किसको क्या चाहिए? वेद, देब, श्वेत, क्या चाहिए आप लोगों को? What do you want? Whether you want equity share or preference share of my company. So you have a choice. So who are preference shareholders will depend on you guys. Whether you want equity share or whether you want preference share. Whether you want a fixed dividend or you want a variable dividend. Whether you want to be owners in my company or whether you don't want to be an owner in my company. So Deb is saying he wants an ownership in my company. Okay, that's great. So he'll be my equity share capital. Okay. What about the rest? Ved is saying equity. Great. Ved is also saying equity. What about Shwet? Equity, yeah. So three of you trust me so much, huh? That's nice. It's the first class and I'm getting so much of trust that you are investing in my equity share capital. You want to be owner in my company. Right? I'll tell you one thing, in one batch, when I used to work with some other edtech company, right, in SEBI batch. So uh, once I asked in my class whether you will be, after explaining all this stuff, I asked students that whether you will buy preference and whether you will buy equity. So everybody answered preference. Everybody answer preference. So I always used to tell that this is the first class. When we will be having last class, you will always buy equity shares in my company. Because as of now, this is the first class. You must be not trusting me or my company, right? That's why you are investing in equity shares of my company. So where they're saying, I know your company will do well. I have faith. That's amazing. I too have faith that you will clear SEBI examination. Okay, great. So three of you are my equity shareholders as of now. That means you have invested your money in my company to create wealth. Equity shareholders are to create wealth. They don't want fixed dividend. They don't want fixed dividend. They want the residual interest. So let's suppose I earned 10 lakh rupees in the first year. I earned only 10 lakh rupees. And suppose my preference share dividend liability, the amount that I have to pay preference share dividend holders, right? Preference shareholders is 10 lakh only. So I'll be paying this entire amount of 10 lakh to preference shareholders. Equity will be getting nothing. They will get zero. They will get zero because I need to pay preference shareholders first, right? They were saying, so we have more faith on you than your previous students. Yeah, they too have faith in me. Most of them are now SEBI officers because in 2024 examination the result just came like few days back only, right? So 30% of that batch students are now SEBI Grade A officers. So I was so happy to connect with all of them a few days back only, and I hope they trust me now. Okay, so let's get back to the example. Okay, jokes apart, let's get back to the example. I earned 10 lakh rupees in the first year of operation. I have to pay 10 lakh rupees to the preference shareholder because they are having dividend right worth rupees 10 lakh. Okay, I'll tell you how the dividend gets calculated, how to calculate the dividend. I'll be telling you. I will be paying entire 10 lakh rupee to preference shareholder. Equity shareholder won't be getting anything. But let's suppose second year, I earned a profit of 1 crore. I earned a profit of 1 crore. Profit, I'm saying, not sales. Profit. Still, preference shareholders will get 10 lakh rupees. Now, you guys will get 90 lakh rupees. That's the residual interest. 90 lakhs is the residual interest. You will get 90 lakh rupees because you are the owners of my company. Obviously, depending on the proportionate shareholding you are having, right? Let's suppose Deb is holding 10% of my equity share capital. So 90 lakhs ka 10%. Deb will get 9 lakh rupees. Whatever proportion you guys are having, right? So that is how equity shares and preference shares work. Equity shareholders are the owner of my company. Preference shareholders are having the right to receive fixed dividend. They will definitely be getting a priority over equity because equity shareholders are the owners of my company, right? So I can say that preference shareholders, the risk is less, right? The return is also less. If my company goes down to zero, I'll be paying my preference shareholders first. You guys will definitely lose your money. If I go down, you guys will lose your money. That's equity shareholders. You are having a high risk, but your return is also quite high. You guys have possibility of earning unlimited returns when you invest in equity shares. Let's suppose you invested in HDFC Bank in the year 2000. I don't know HDFC Bank existed in 2002 or 2000 or not. I think it does. Okay, it was there. It was there, I think. Okay, in 2000. Let's suppose HDFC Bank was trading at 10 rupees in 2000. What's the price of HDFC Bank right now? It's close to 1700 per share. That's the power of equity. That's the power of equity. The return is high, the risk is also high. So this is a very common concept of finance. Whenever your return increases, your risk will also increase. Whenever your return goes down, your risk will also go down. Okay, that's the concept of equity and preference share. And uh, in the balance sheet we can see, just give me a second, in the balance sheet we can see that equity share capital, if you see preference share capital, it's written 13% preference share capital, but there is no such kind of percentage when we see the equity share capital, obviously, because they don't receive any fixed dividend. Preference share capital receive fixed dividend. That's why a percentage is always attached in the prefix. 13% preference share capital. That means I have issued preference share capital worth rupees 1 lakh at 13% fixed dividend. This is the fixed dividend rate. So, sir, how to calculate? It's so simple. 1 lakh is the amount of capital multiplied by 13%. I need to pay them 13,000 every year as fixed dividend. Sir, what about equity? Equity are having a residual interest that totally depends on what amount of profit I am gaining. If I'm having, a bumper profit, they'll be having a bumper dividend, right? But if I don't be have if I don't earn any kind of bumper profit, then they will get nothing. They will get dumper, not bumper. Okay, so that's the difference between equity and preference share capital. So I have just I realized that it's been 1 hour, so I need to close the class. I do have a class in RBI course as well. Okay, so I need to go as of now. Let's conclude today's class, and we'll be meeting tomorrow in the next class. And I won't say we'll learn accounting, we'll play with accounting, we'll enjoy accounting in the next class also. Okay, just like we did it today, right? So one request from all of you, that please do revise everything, whatever things I have taught, whether you are from a commerce background, whether you are from a non-commerce background, no matter what background you are having, please revise it, and we'll be meeting in tomorrow's class for sure, with a lot of learning, with a lot of fun. Okay, thank you so much for watching this class, and I wish you have a very nice day. Okay, okay guys, bye bye, take care, see you soon.